and Alan Qureshi, president of Blue Water FinTech. Gentlemen, how are you doing?
Good to be here. Thanks for having us, Jason.
Hey, my name's Alan Qureshi. I'm the founder of Blue Water Financial Technologies. We are a fintech platform that is primarily focused in the mortgage asset ecosystem. What that means is with our technology, we're able to deliver assets on chain in a fractionalized form. And through our processes, we've been able to digitize the mortgage asset origination process here in the US with regard to pricing, trading, transferring, diligencing, and delivering assets and tracking those assets seamlessly through an all digital platform. Yeah, I guess for my part, what I would say is that, listen, if I think of the developments that have happened over the past 5 years, I'm going to take a capital markets view of looking at this and the shakeout and deleveraging that have happened with the functional equivalent of our Enron or our WorldCom with FTX, or even on the banking system with regard to SVB, and the move by investors to look at alternative ways to get access to assets, right? As one particular sort of watershed event, I actually think that shakeout has been good for the industry. I think that the potential for regulation is good for the industry. I think that having less hype and more focus on, as we're discussing right now, right, real world assets that provide real value and solve real capital needs and investment needs on the one hand, right? And that's what I think about with regard to people who want access to assets, right? So-called token investors. And then on the other side, people who need distribution and people who are looking to unlock. I think we started with, well, hey, liquidity is just a start. I think it's the other aspect, which is, okay, hey, great, like there's a pool of liquidity on the capital side, but what I've seen, certainly from my seat, particularly coming from the U.S. mortgage arena, where there is a fair amount of still processes being done manually, is this sort of parallelization of, on the one hand, token technology getting better and better, sort of democratizing and digitizing. And then on the other side, real world assets being made available in a form that's consumable for the other side of the coin. So I think it's sort of really, two things. The fact that, hey, a lot of the hype's being extracted and we're actually focusing on real world assets, that's a really good thing. And then the second piece is the fact that, quite frankly, a lot of these other sort of ancillary assets that are very, very interesting, that have very interesting yields, that are very deep and liquid, right? $14 trillion US mortgage market. That's a deep market, right? And the fact that technology is now catching up on both sides, I think that's highly positive and very accretive to tokenization just generally.
But I want to shift the conversation a little bit over to, a little bit away from the liquidity aspect. I think that's a lot of conversation we've talked about a lot, which is fantastic. But let's look at the other side of the coin that we explored earlier, which was the back and middle office. Alan, you're working with digital mortgages. Talk to us about how tokenization enhances mortgages in the back office or from the secondary market perspective.
Yeah, no, and what I would say is that it's needs driven, right? So the ultimate finished product has to be, and I think this dovetails, by the way, quite nicely with what Tal was talking about, which is embedded in all of this. For something to be on chain, it actually has to have some level of trust associated with it. It has to have some level of diligence associated with it. It has to have a degree of transparency around what is the thing that you're buying, right? So assuming that's the end goal, the front part of that, or all of the concurrent activities that lead up to good delivery, include asset verification, right? Price certainty, right? So, hey, I bought it at some price or some yield or some cash flow. What does that actually, how does that manifest itself in terms of the underlying assets? Have they been reviewed? Is that process also digital, right? We would hope that it is, so that everything that tokenization provides on the back end can be afforded on the front end. And when we think about that, when we think about something as archaic historically as has been mortgage, we start to think about the fact that we need an ecosystem to ingest all of those assets on the front end and make that very streamlined under this concept of delivering good product that has been reviewed. In our case, our processes are insured by certain underwriters of Lloyd's and London, right? So that means that not only are you getting interesting product at an interesting yield, but it's been reviewed, and that process itself is insured. So all of a sudden you're in a zone from a back office and ops perspective where the product that you're boarding on chain has very clear provenance, has very clear sightlines into what the asset quality actually is. And I think that's highly essential, going back to what Tal was talking about vis-a-vis trust and liquidity. Make sense? Right? When you think about your traditional kind of third-party rating firm, right? TPR firm. Heretofore, pre-Blue Water, certainly in our zone, they might take 8 hours for a given loan file, right? Truly, 8 hours to review a loan file with offshore resources, and that's stare and compare, literally butts and seats, right? Think about how arcane that is in terms of where the final resting place of those assets are, right? So we spent a lot of time digitizing that process from end to end, and there is a question around what's been one of the hardest issues to solve. Well, that would be one of them, right? Creating that end-to-end ecosystem, that layer that goes all the way across. So ultimately, you're handing off a baton to the tokenization piece, right? Good delivery, trusted assets, right? That have been reviewed, as Tal would suggest. Yeah.
Yes, just a quick question for you, Alan. I actually just recently went through the property, purchasing property process. Didn't mean to create an alliteration there, but a lot of when I think about trying to create efficiencies in the market or in this transaction, I'd say it's maybe like a 2-month process. There's negotiation between the buyer and seller. I don't really see digitizing that. There's the legal contract of all the nuances of that individual deal. The seller is going to pay for this, the buyer is going to pay for that. Negotiating all of these terms to come to a final price and who's paying what costs and, calculating my all-in costs that takes time. So I'm curious. And then, the legal review of both sides, right? Both sides need to have lawyers to make sure the contract actually reflects upon what was agreed. And then the final 3 days of the transaction is the actual settlement and signing of documents and things to that effect. So I'm curious to hear from you because from my perspective, I've been seeing a lot of people trying to bring efficiencies to the mortgage market. But then when I went through it myself, I was having a hard time thinking about how you can automate and digitize a lot of these steps that were actually the most cumbersome, difficult parts of the process.
Sure. So we primarily focus on the U.S. residential market, which
yep.
For what we've built is an end-to-end process. You must just be exhausted having described all of that. That sounds like a lot. And listen, there are various aspects of the mortgage market, mortgage ecosystem, right? We started with mortgage servicing, which is a very interesting asset. It's negative duration, it's high yield, it's fractionalization ready, right? Wonderful. We built out a platform, pricing, trading, transfer, QC, due diligence, right? We started with MSR, right? What you're talking about to me sounds like a non-QM loan. Well, we've built, all of the secondary market capabilities from the front end all the way to the back, right? Back meaning, hey, here's your token, let's go, right? So when we talk about the underwriting of mortgage assets, when we talk about the actual front-end manufacturing of mortgage assets, that's an area where we're investing heavily, where there's a lot of opportunity for throughput, right? So if I think about a typical mortgage loan right now or a mortgage underwriter, they might take time to do 2 loans a day, right? With Blue Water technology, they can do 10, right? Now think about that throughput, right? So your point's very well taken. My gosh, it's sticky. It takes time, right? It's very cumbersome. Point well taken. At the end of the day, right, we see thousands of loans a day through our platform, right? We're the largest private entity in terms of trading, our various mortgage assets. What we're able to do through this technology is deliver, to your point, after all of that, right, a very streamlined, good delivery loan file, going back to this concept of trust.
Okay, so it's more after the initial, it's like, make sure it's digital from start to finish, but all the process I described is still there. It's just if the bank that did the initial mortgage wants to trade it or give it to someone else, that whole trail is digitized, and the trading of my existing mortgage is what would be faster and more efficient with your tech. Is that right?
Absolutely. And I think, as Tal was saying, right, in 15 years, those who are efficient will still be part of this conversation. Those who are inefficient will likely not be, right? Because what's the limiting form? The limiting form is better margins, more efficiency, and scale, right? That was one of the other things I wrote down as Tal was talking, was, quite frankly, we need trust, right? We need good delivery, and then scale, right? Can we move assets through the front door, right? And can we do it in a meaningful way that's broad enough, right? Certainly from where we sit, we see it. It depends on what the asset is. Like, to your point, again, to dovetail off of Tal, offering bills out, right? T-bills, like, that's great. We can do scale, we can do size, but unless we're sort of worried about, unless we're trying to solve like a currency sort of transaction, right? It really comes down to what does the return look like and what problem are we trying to solve, right? Who's our end buyer, right? Like, there are only finitely many people that want bills vis-a-vis token. But if you can unlock mortgage assets, for instance, right? And you're going to talk to us about high yield. And if you can do that in a way that delivers all of those key elements, trust, scale, et cetera, where we're starting to get is we're solving problems for investors who want access to assets that they otherwise can't get the same way, for whatever reason. They can't trust it. They don't know what the delivery standards are. It's at a different return target than what they're looking for. And so I think it's a number of these different things that we simultaneously have to solve for on both sides of the coin. At the end of the day, the U.S. mortgage market is ripe for this sort of activity. We've been focused on MSR, but coming down the pike are whole loans, coming down the pike are non-QM products. And, like, listen, at the end of the day, the average end investor doesn't have access nor scale to be able to get access to these assets. Tokenization creates that natural segue. Again, we have to figure out what problem are we trying to solve for them? At what return? How do we enforce trust, right? How do we do it in a way that makes it interesting with scale, as Tal was saying? We feel like we solved a lot of those problems. There are others. I think there was a question on that. But it comes back to, it's a chicken and egg, right? Part of the reason that we're not here already is you need a number of the key infrastructure solutions in place. We spent years building it. We're here. We're ready. We're chain ready. My expectation is both Tal and Scott, with regard to what they do, are chain ready. But it really has been heretofore a chicken and egg concept. And we got the chicken and we got the egg.